Okay. Good morning, everybody. This is the live market open for May 17th. It's a Tuesday, 2 weeks after a turnaround Tuesday for the US dollar. I'm Yohay, Elam of Forex Crunch and the Market Movers podcast, doing the show as usual for FX Street. And as usual, we'll cover recent developments in market, talk about various charts and levels. We did have some moves in the pound and Aussie, discuss the next 24 hours, and we have a busier calendar, and of course, answer your questions. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, what's going on in markets this morning? Well, one of the things impacting the mood in markets is that oil prices continue rising. One of the things supporting oil is what Goldman Sachs said yesterday or over the weekend regarding that oil has bottomed out, that now there's a deficit in oil, not an oversupply, and this supports commodity currencies in general. And another development we had yesterday, quite a few opinion polls in the UK regarding potential Brexit or no Brexit, the EU referendum scheduled for June 23rd. And there was one poll showing a huge margin in favor of remaining in the EU. That was 55-40 according to RBA. Another poll by ICM was more mixed. They showed, well, in the online poll, a lead for the Leave campaign by 4%, but in the telephone poll, it showed an 8% lead for the Remain campaign. Bottom line, it seems that there is a higher chance now, or the mood in markets is that there's a higher chance for the UK to remain in the EU. Sort of there's no momentum for the Leave campaign, at least I would say that. Okay, so we have the pound supported. That's another theme going on in markets. Yesterday was a holiday in some European capitals, and this made the liquidity a bit thinner. But today everybody's back to their desks, and we should have a lot of action. We did have a few figures yesterday. We did have once again the US manufacturing sector post another dismal figure, and the Empire State Manufacturing Index fell to -9%, was expected to be positive. Empire State is, of course, New York. It's a regional Fed indicator for the manufacturing sector. So it's one region out of a small sector in the US economy. And as expected, no, I can't say it had a big impact. Neither did the TIC long-term purchases. They beat with an inflow to the United States, 78 billion. But more importantly, we did have an impact from the RBA meeting minutes. They do reflect worries about inflation. That's the reason that they did cut rates last time. Remember, these are minutes from the decision when they decided to cut rates, okay? But on the other hand, they expressed caution, not only about the economy, but also about their next moves. So when we're talking about caution, maybe we're talking also about hesitation. So it now seems that in the next move to cut rates, probably the next move will be to cut rates in Australia, but it's not that imminent. It's not going to be in June. I mean, there are lower chances that Glenn Stevens, in one of his last rate decisions in June, will decide to cut rates once again from 1.75 to 150. So that supports the Australian dollar. We'll look at charts quite soon. And in New Zealand, inflation expectations, a key event, because in New Zealand, they publish inflation only once per quarter. And this is also a quarterly report and sort of complements the CPI one, but there was no change from the previous quarter, 1.6. We're seeing the Kiwi dollar move a bit to the upside, but sort of enjoying oil riding on the Aussie. I cannot attribute it to this inflation expectation figure. Let's go to the charts. Let's see, yeah, good morning, Fabian. Good morning, Horace. Good morning, Luca. Good morning, everybody. Let's go to the charts. Okay, euro dollar capped more or less in range, 113.35 yesterday. Went all the way to 113.40, but never going too fast. So euro dollar remains a pair that is not in motion, okay, more or less goes for the Japanese yen. Okay, these major pairs are moving a bit up, a bit down, but not going anywhere fast, at least not the euro. Euro dollar, the world's most popular currency pair, is somewhat stuck in range. We did see it move a bit to the upside this week, but I think the accumulated gain is around 20 pips. Okay, 113.35 resistance, 114.10, 114.60 strong resistance. On the downside, we still have 112.50 and 112.20, but perhaps also the lows seen last week around 112.80 could also work in case the euro falls down. Okay, let's talk about the pound. The pound is moving to the upside, currently 145, even gaining a bit more ground. I still see 145.10 as some kind of resistance, followed by 145.80, and to the downside we have 144.40 and 143.40, 143.50, somewhere around there. Anyway, it's clearly a move to the upside, 100 pips this morning. To the upside, the move did not begin this morning, but we're seeing an extension of it. Yes, I would attribute this to these opinion polls, the ICM one published in The Guardian, which did show mixed results, online VS versus the phone poll, but together with the ORB poll, I think it was published in The Telegraph, there's more support for the Remain camp, so it seems at the moment. And yeah, but now we'll begin getting some hard data from the UK. Inflation today, employment tomorrow, and on Thursday we have retail sales. We'll talk about events for today later on. Dollar yen, well, it is moving to the upside, so it's not fully asleep like the euro, but not we're getting closer to this triple top, okay, at 109.50. This was challenged a few times, so we might see, in case we have this sort of more risk-on sentiment, we might see the pair moving higher. In Japan, we also learned there's an intensifying debate about the sales tax, okay? The government in Tokyo is once again discussing a potential delay in the next rise of the sales tax or value-added tax. It raised it in April 2004. This lifted inflation artificially, of course, because prices went up because of higher taxes. But it did put the economy in some kind of a shock, mild recession, if you wish. The unemployment level in Japan remains low. The economy is still doing great, but it's not the robust growth that Abe was looking for. And in 2014, he later that year called snap elections, taking advantage of the fact that the opposition was quite fractured, and won them with the promise to postpone the next sales tax. Now it's promised for April 2017, and they might postpone it once again. At the moment, I don't see this political debate impacting Japan, but we might see it work this way in the future. A lot depends on the GDP data coming out from the land of the rising sun. We'll get that also soon. Okay, dollar CAD. Talking about all the sales tax, didn't mention some levels, 109.50 followed by 110. On the downside, we have 108.40 and 107.65, which I see as a strong support. Dollar CAD, it is the Canadian dollar is strengthening. It is enjoying higher oil prices, but not as much as I would have expected. 128.30 is support, followed by 127.50, resistance 129.30 and 130. So we are seeing a stronger Canadian dollar, but not. We're seeing moves of higher magnitude in the Australian dollar, and that's because of what I mentioned before. The RBA's meeting minutes did not show any rush for the next rate hike. Rate cut. 73.54 is the current level, under resistance at 73.75, support at 73, the round number. So we had the Australian dollar falling under the round level. Well, first of all, back in mid-April, it found support. Mid-May. Sorry. So just a week ago, it found support at 73. then managed to rise to higher ground and crash once again, reaching a low over there at 72.40. And now we have a clear break to the upside to a higher level. 73.75, 74.40 are the levels I'm watching to the upside. To the downside, 73 is support once again. So the RBA hit the Australian dollar quite hard with the rate cut and then with slashing forecasts. Lower inflation forecasts implied more rate cuts in the near future, but now these meeting minutes sort of cool down the atmosphere, allow the Australian dollar to recover. Okay, I'm not sure if it's just a correction or a change of course for the Australian dollar. I doubt it. There are also worries, fresh worries about China. Everybody's talking about China's debt bubble. So I see it as a correction. One thing is clear, we're back to the previous range. Okay, we're one range higher. Yeah, so it's definitely more than a dead cat bounce. Okay, but I'm not sure if it's a change of direction. Kiwi dollar, well, 68.40 is the new level here. To watch to the downside, we have 67.20, so the pair is relatively stable, a bit higher, of course, enjoying the rise in oil prices, getting a bit carried away by the strength in the Australian dollar, not the same magnitude. Okay, makes sense. Inflation expectations came out New Zealand, bang on the previous one. They didn't further fall. They didn't rock the boat too much. The dollar versus the Swiss franc getting closer to resistance at 98, getting further away from support at 96.40. This is mostly, well, some stability in the US dollar against the euro is reflected also here. Euro Swiss a bit higher in range, but this is the same old range. The pair is sort of well settled above 110, this cross, but the ranges here, as always, are quite limited. I would say 111, 111.10, or 111.11 if you wish, is the next line of resistance, but movements are very slow. Okay, the strength of the pound in euro is reflected also in euro pound. Okay, so the better expectations, the more favorable expectations for the EU referendum. I mean, markets prefer the UK to remain in the EU, are seen also here. So after a few days that the pair was sort of capped under 79.30, boom, we're crashing below 78.30, currently hugging the 78 level, very round number. Support, strong support is at 77.40. Let me zoom out just a bit so you can see that line. Anyway, we're seeing nice movements in this cross. Okay, failing to capture, to break above resistance there at 79.30, failing to make another move on the round 80 level, and we're falling down. The fundamental reasons, well, are the various poles. Okay, euro yen, much more stable. We are seeing this morning a move of the euro to the upside against the yen. Yeah, well, it's mostly the weakness of the yen because euro dollar is extremely stable, unfavorably stable. So 124 is the current level. 125 remains strong resistance. 122.50 is where the pair bounced from. Further support at 121. 121.65. Okay. And we have a very nice move here on pound yen, the Gepi, the Dragon, one of technical traders' most favorable pairs. 158.88 is the current level, making a move, an attempt above the 158.50 level, as you can see back in March, and also a bit later on. 158.50 worked as a separator of ranges, followed by the round number of 160 and then 162.50. I don't know if this trend will continue. We might have an opinion poll suggesting higher chances of a Brexit. We might have the yen strengthening for any reason. But anyway, at the moment, a very strong move of nearly 200 pips over there, over 1%, 1.2% at the moment. Support, anyway, is at 155.80. and 156.60. Okay, and I mentioned oil prices. So here we are, yet another fresh 6-month high. The move was mostly seen yesterday in the US session, not so much this morning. This morning it's a bit more stable. Anyway, 48.28 is the highest level in 6 months, last seen back in November. If I will zoom out, we can see that also last year, well, actually we had the same kind of stability. Yeah, we also had this rise right here back in May. Well, it's not a one-to-one, but we also had a recovery in oil prices around the spring, and they resumed their big falls, well, during the summer when we had the Chinese stock market crash. History doesn't always repeat itself, it sometimes rhymes. Anyway, the round number of 50 for WTI crude oil is naturally the next line of resistance. But I would also add this peak right here, and that's at, yeah, almost 51 that we've seen back in October. That's sort of the last hurrah before the pair fell all the way to $26 at well, early in February. Okay, back to the hourly chart, back to euro dollar, which is still not doing too much. Okay, so I'm looking at the chat box right here. Lucas says, Dragon setting up to fly, pretty inverse H&S head and shoulder setup, a break of 162 targets, 175, probably fast and furious. I started building longs from 157.40, adding on a break of 162. Okay, let's take a look at the chart that Luca shares with us. As every morning, Luca shares excellent charts. Yeah, I see what you're talking about. So you see this downtrend, this sort of very moderate downtrend resistance line beginning from way back there. Well, March, not that in the past, not that far in the past. Anyway, inverse head and shoulders. Yeah, I can see that pattern. Yeah, I don't see the Bank of Japan intervening too much to weaken the yen. A move will depend more on the pound, more on opinion polls, and this week on the streak of key top-tier UK releases. All right. Yeah. So thanks for this chart. Anyway, yeah, 162.50 is also level I'm watching. Good morning, Sirik. Luca also shows that the dollar index channel I've been tracking for weeks. Yeah, for those of you coming regularly to the show, yeah, I agree with Sirik. It's a nice chart by Luca. Yeah, okay, so we're seeing a break above this downtrend resistance line. You mentioned it, I think, also yesterday. And maybe this implies another zigzag move to the upside, to higher levels here on this. This is the FXCM dollar index, right? Anyway, we could see further moves to the upside. We did have more optimism. Remember, the big event last week was the retail sales report from the United States of America, which came out way better than expected. Compounded with consumer confidence, we did have lots of more optimism about the US economy. Regarding the US dollar, the jury was, well, the US dollar initially reacted positively, but this didn't last too long. I would say that today's events could have more significant impact. Okay, so let's talk about what we have today in all markets. We talked about, well, all the figures we had yesterday and this morning. Today is a relatively busy day, I would say. At 8:30, we have UK CPI. So a pause from the to stay, should I stay or should I go debate in the UK, and a focus on some hard data for a change. So this is the FX3 calendar on Forex Crunch. We have the most important figure is just headline CPI, headline consumer price index, year over year. So lots of figures over there, but let's focus on the most important ones. The year over year rise in prices in all prices is expected to remain the same in April as in March, 0.5% year over year. That's the most influential figure. Second in line, the heir to the throne, if you wish, is the core consumer price index. That excludes oil prices and perhaps some volatile food prices. It's also expected to remain unchanged at 1.5, okay? Afterwards, we can look at the producer prices, which are released at the same time and clearly overshadowed by the consumer prices. And I would also mention the retail price index, the year-over-year one. That's sort of another slice and dice of the data. It's expected to moderate from 1.6 to 1.5 to decelerate. I would say this is the third in line. If we have no surprises in the CPI and core CPI, the big surprise here, the retail price index could have an impact. I don't expect the PPI to have a significant impact today. And remember that in the UK, a few things. First of all, in the UK, year-over-year figures are more important than month-over-month ones. Okay. Another thing to watch out for is we do have lots of price action on the pound and pound dollar, especially just before the publication. Okay. Sometimes there are leaks. Sometimes the data is out early to some people. Sometimes these are just rumors, but rumors can fly, can accelerate. The moment we are seeing pound dollar move to the upside, I don't think it's related to the release yet because we have more than an hour. Usually the moves happen around half an hour, 20 minutes before the release, just around 8 GMT, just after 8 GMT, just or 9 in the UK or 10 right here. Then we have the release. It always does have an impact. Sometimes it's a buy the rumor, sell the fact. For example, if we have now another rise towards the publication and then CPI beats expectations, we might see the pound falling. Why? Because it has already been priced in and then traders take profit. And then we'll see the moves probably going on for another 20 or 30 minutes until 9 GMT. But then we can return to the soap opera of the Brexit. Well, it's an important issue, but the politics can be funny. Anyway, so the focus of the markets nowadays is less on the hard data from the UK, but on Brexit, which is the referendum is a month away, 5 weeks away. So this will serve as a pause inflation data because inflation does impact the Bank of England's next decisions. Okay, this is of course a key release because that's what moves interest rates. And yeah, tomorrow we have employment with wages and then retail sales. So that's sort of the big event for the morning. And then we have in the United States the same report, the inflation, of course. So it's a bit more messy in the United States today because we have, well, first of all, in the US, the focus is on core CPI more than on headline CPI. That's different from the UK. And year-over-year figures are the most important ones. Last time we had a slowdown, a deceleration from 2.3 to 2.2. Another move down is expected from 2.2 to 2.1. On one hand, this is still above the Fed's target of 2% on core inflation. On the other hand, the Fed focuses on another measure of inflation, the core PCE price index, rather than this consumer price index. But it still matters, of course, a lot. That's the headline figures for most. The headline figure for most Americans, and these figures, of course, go hand in hand together. If CPI rises, core PCE rises, and the other way around, the numbers are just a bit different. Okay, so core figure is the most important one. A small drop is expected. Then we'll also watch out for the headline one. Here, a rise is expected from 0.9 to 1.1. Monthly figures, I think, will be relatively overshadowed because the focus is a bit more on the year-over-year figures. I mean, you'll see the headlines coming out first on the month-over-month figures, but in this case, for the bigger picture, for the Fed minutes tomorrow, the year-over-year figures are more important. And we have at the same time also some housing figures. The building permits expected to rise just a bit from 1,086,000 to 1,130,000. But housing starts, well, the same trend, also to rise to 1,125,000. So what we had in too many occasions here is that building permits are priced to the upside and housing starts to the downside, or the other way around. Anyway, today the figures are released together with the CPI. So CPI is the most important one. And then we'll have to see if both housing figures go in the same direction in order to get a better trend. Of course, if all figures are positive, if all of them beat expectations, it's dollar positive. If all of them miss, it's dollar negative. Okay, so it's quite a big bulk of publications at 2:30 GMT. All right. Also, for those trading the Canadian dollar, we have manufacturing shipments here. Expected to fall 2%. At 1:15 GMT, we have industrial output in the United States. Expectations are for a bounce, a rise of 0.3 after a drop of 0.6, but it shouldn't have such a big impact. The echoes from the CPI and also building permits, housing starts could have more of a market impact. Okay. Yeah, also in the US afternoon, we have milk prices in New Zealand. Bi-weekly auction, there isn't an exact time. It always impacts the Kiwi dollar. Last time we had a drop of 1.4, maybe we'll have a bounce this time. It's been a bit volatile. We have speeches by Fed officials. Williams, which was considered a dove in the past, close to Yellen, but has sounded quite a few hawkish statements. We'll be speaking at 4 GMT. Lockhart of the Atlanta Fed, which is has always leaned to the hawkish side, will speak at, they speak at the same time. Okay, maybe it's some kind of panel or conference. I don't think they have such a big impact. The market was bitten by the hawks only to be hit hard. Well, by Janet Yellen and Dudley, the big doves. We talked about New Zealand milk auction. The third inflation figure for the week from New Zealand after inflation expectations and the milk auction is the PPI at 9:45 GMT. The more important figure here, if you're trading it, is the input, PPI input, the first one here on the chart, which is expected to rise 0.3 after a drop of 1.2. And at night, we also have a speech by the governor of the RBA at midnight GMT. And some Australian figures, I would say they're second-tier ones. Yeah, the most important figure for me in Australia at night is the wage price index. As with other countries, wages, salaries, money that you get, pay rise, that impacts core inflation, the amount of spending. So currently it's expected to remain at a yearly level, year-over-year rise of 2.2, no change from the previous quarter. Okay, quite a few figures here. I think I talked about, oh, I missed an important one. No, why don't I have it here on just a second? Let me verify. The Japanese GDP is tonight. Or maybe not tonight. I think I missed out on that very important stuff. Just a moment. Yeah, here we are. Sorry for not showing it before, filtering this out. As you know, the FX Street calendar allows you to filter in or out so many countries. and I missed that country. Anyway, GDP, this is the preliminary release for Q1. Usually there are significant revisions, and nevertheless, the preliminary release has a lot of impact. So the quarter over quarter, we're expecting a small rise of 0.1 after a drop of 0.3 last time. If we have another drop, that's a technical recession. Remember, the Japanese economy is doing quite well, but we'll need. But I mean, growth is weak. I mean, employment is good. The country is running okay, but there is lack of growth. Anyways, a small rise of 0.1 is expected. That means that a negative figure cannot be ruled out because it's very close. It's also important to watch the deflator because that tells us also not only the real GDP, but also nominal GDP. As we know, Japan is fighting deflation, falling of prices. And year over year, annualized, well, more of the same. Okay. Anyway, this is a key figure, not only to see the strength of the Japanese economy, but also to see the potential for a rate, for further action from the Bank of Japan and for action from the government regarding the sales tax, okay? So if we have headlines about a recession in Japan, we can have potentially a postponement of the sales tax that could weaken the yen and perhaps new elections there. You never know. So it's hard for me to say what will be the impact of the Japanese GDP. Depends on the reactions from the Bank of Japan and in this case also from the government. In any case, the yen is already weakening, 109.50 at the moment. Next level of resistance is 110. Okay. Quite a busy day. I see here a few comments. Lucas says, thinking if polls keep moving in the right direction about Brexit, Fed may feel entitled to a June hike. In theory, yes. But the level of uncertainty is so high. And if you remember the general elections in Britain last year, the parliamentary elections in May last year, they showed a very tight race between Labour and the Conservatives. And at the end, it was quite a significant victory for the Conservatives, for David Cameron. He moved from coalition government to an absolute majority. The polls missed on that. They can miss in either direction, okay? So we will need, let's say, I don't know, very solid 10%, 12% leads for the stay campaign, and with few undecided to maybe convince the Fed to take this leap of faith. I think that, well, never say never, but the Fed has shown that it errs to the side of caution. Better wait than raise rates. On the other hand, yes, this is the last chance for them, as I see it, to raise rates, because in July there is no press conference. September is already too close to the elections, so the next rate hike could be only in December. And the Brexit is not the only consideration. There are also mixed figures about the economy. This is what I wanted to show you guys. Well, chances for rate hike in June, according to bond markets, are 4%. Okay. Even after the good retail sales, chances remain low. Of course, we have a few more figures until that June meeting. We have an update on GDP next week. We have the new non-farm payrolls early in June. We have, well, many more figures, but I don't believe they'll be so good, and that the chances of Brexit will be so low to make the Fed really optimistic. For December, we already have a 60% chance of a rate hike, okay? Let's just look at November, no chance. Well, also politically, there's no chance of a rate hike just because of the elections. Yeah, Donald Trump is always in the news. So many things to catch up with, but nothing really significant for markets at the moment. Yeah, another comment by Luca. If the dollar zooms the uptrend, looking for a break of 130 and dollar CAD and retrace first Fibo 200A. Okay. Yeah, I would say that for a move higher in dollar CAD, we would need oil prices to fall. I still think there's oversupply, but well, data last week showed otherwise. Today we have the API figure regarding oil inventories, which is sometimes confusing and not the big market mover. Oil inventories that are released tomorrow, that's the big market mover. Anyway, thanks for the chart. I see the levels here. Yeah, 133.16. Yeah, it's also a level, if I'm not mistaken, that I have on my charts. So yeah, but 130 is clearly a very, very big hurdle to the upside. Okay. More questions? Anyway, quite a few events for today. Let's talk about the bigger picture. The weekend we had a miss on Chinese industrial output as well as other figures over there. It kept the pressure on the Aussie, but today the fate has changed for the Aussie with the positive meeting minutes. Today the focus is on inflation in the UK and in the US, but as we've seen quite a few other figures as well, Japanese GDP could be important. Tomorrow we have the UK employment data. The focus is still on wages more than actual jobs, but this could change. And of course, the Fed meeting minutes. If they do want to hike in June, as you suggest, well, that there's a possibility of that. There's always a possibility. That would be their chance to provide us this hint. We'll talk about that more in detail tomorrow. And on Thursday, we have Australian employment figures. So also for the Aussie dollar, it's quite a busy week. Same goes for the pound, retail sales on Thursday. And on Friday, not the most important figure, but having the last word in the week, US existing home sales. Okay. In general, this is a busier week than the previous one. This doesn't mean, busy week doesn't mean we'll have movements in euro dollar though, which has been ever so frustrating. Yeah. Yeah, we're seeing the pound, the perky pound jumping Japanese yen. Well, not exactly jumping dollar against the Japanese yen. And the oil prices remain high, 48.22. The high for today has been 48.39. Okay. US stocks, if you're interested in that. As far as I see, they have the same range. We did have news that Warren Buffett raised his stake in Apple. That's good for Apple, I guess, but it doesn't tell us. The impact on currency markets is a bit more limited. Yeah. Okay. And for the wrap up. So this is the wrap up for the live market open for Tuesday, May 17th. We've seen some movement in markets. Oil prices continue rising thanks to Goldman Sachs, thanks to perhaps some falling supply. We'll get more news on that this week. This supports commodity currencies in general. Can't say that the Canadian dollar is really standing out. There are still issues from the Canadian wildfires. The currency that is standing out is the pound. A few polls regarding the Brexit sort of cluster around higher chances for the UK to remain in the European Union. This supports the British pound quite strongly, not only against the dollar, but also against the euro and the yen, and basically everybody. Okay, In news that we had yesterday, the most significant piece of news came from Australia and the land down under. The RBA meeting minutes. They did show worries about inflation, but they did mention regulation. But moving forward, the chances for another rate hike are lower. Rate cut. The RBA is cautious, is in a wait-and-see mode, moving one step at a time. And chances for a rate cut in June to further weigh on the Aussie look lower. So the Australian dollar did bounce. New Zealand inflation expectations did not rock the boat. So let's look at currencies. As I mentioned, euro dollar is very, very stable. 113.35, 114.10, 114.60 are levels to the upside. 112.50, 112.20, and well, 111.50 to the downside. Hopefully we'll have more meaningful movements in the world's most popular currency pair. But look here, pound dollar, 145.10, rise of over 100 pips this morning. Next resistance 145.80 and 146.50. Support at 144.40 and 143.50. Today we have a test for the pound. Dollar yen, fourth time a charm. We have this triple top of 109.50. Let's see if you can move above this level. Next resistance is 110. Support 108.40 and 107.65. Dollar CAD, the Canadian dollar, is looking better, getting closer to support there at 128.30. Further support, much stronger, 127.50. Resistance at 129.30, but more importantly, 130. Australian dollar moved one range to the upside. I'm still not sure if this is a change of direction for the Australian dollar or just a significant correction. Anyway, this is significant. This isn't a dead cat bounce. 73.46 is the current level. 73.75 resistance, followed by 74.40. Support at the bottom there at 72.40. Kiwi dollar, higher within the range. 68.40 is resistance, currently above 68. 67.20 is support. A busy day is awaiting us in terms of indicators. UK inflation, watch out for wild movements in the hour around the release. First and foremost, watch out for headline CPI year over year, then for core CPI. And probably the most important release for today is the US CPI. Core CPI is more important than headline CPI in the US. Year over year has more of a long-term impact, but also watch for the monthly figures. And at the same time, we have building permits and housing starts. Usually they offset each other, but perhaps they can go either both negative or both positive. Remember, CPI is more important. So at 12:30 GMT, there's going to be lots of action. Okay, 1:15, industrial output from the United States, probably overshadowed by the CPI 45 minutes earlier. And then the focus shifts to New Zealand. Milk prices, New Zealand, sometime in the European afternoon, US morning, and then PPI later on in the day. Both are, of course, inflation related. Let's see if they move the Kiwi more than inflation expectations did. At night, we also have GDP from Japan. It's hard for me to say what impact will be on the Japanese yen. The Japanese yen does not move too much from Japanese indicators. This could be more meaningful because if the headlines scream recession, there's lower chance for a sales tax hike by the Japanese government. And this is, of course, a form of fiscal stimulus. Also, the Bank of Japan could act. So in theory, it should be, a positive figure, good for the yen, negative for the yen, but I really cannot, I'm not sure because I would, if you are trading this, trade it carefully. Wait to understand what's really going on in markets, because Japanese figures and the yen, doesn't always make sense together. Okay, what does make more sense is Australian figures. Last but not least, at 1:30 GMT, the wage price index, higher figure, stronger Aussie, lower figure, lower Aussie. The RBA watches this. Simple and straightforward. Okay, so we covered yesterday's events, the charts, and today's events. Before we head off, let's take another look and see if we have more questions. Okay, Luca feels a bit lonely sharing charts here. Anyway, I'm very glad you're sharing charts. I hope you don't feel lonely. Please, I hope you're encouraged, and I hope others also share charts. You're all welcome to do so. Don't let Luca feel lonely. Anyway, the last chart, oil view, may try to carve out an inverse head and shoulders from here, down from to then back up. So let's open this. So if you see a potential significant correction before another move up, you're looking alongside this uptrend resistance line. This is WTI crude oil. Yeah, makes sense. The line you're looking at the bottom is 37.80. Okay. Yeah, that was both support and resistance. Yeah, it's also a line I was eyeing for a long time. That was the August 2015 low. Yeah, makes sense. Well, for me, the next fundamental event for oil prices is tomorrow's crude oil inventories release. And Tarek also shares a chart with us. DXY, some targets for the DXY. Okay, so here we have quite a few levels to the. Looks like the trend remains also on this chart to the upside, and we fell at strong resistance. Now we're at sort of pivotal line, and then there's more room, I guess, to the upside, right? So 9,147, 950. Okay, makes sense. And yeah, further levels above. Yeah, okay. So thanks, Sirek, as well. Thank you very much, everybody, for coming. As usual, a wrap-up will be available and the full show available on the FX Street website. That's it. Wish everybody a safe, successful trading day. It's a busy one today. European traders are back. I mean, those that have been on holiday, and there are quite a few releases throughout the morning and the afternoon and also at night. Okay, so that's it for today. See you tomorrow. Thank you and bye-bye.